Welcome to the MiningNewsWire Podcast, powered by IBN. This original audio production delivers market and sector insights, as well as exclusive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 60-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Now sit back, relax, and enjoy the next revelatory episode of IBN's MiningNewsWire Podcast.
Welcome back, everyone, and you are dialed into the MiningNewsWire Podcast, brought to you by the Investor Brand Network. Today, we're going to be speaking with Greenland Energy Company. The company's traded on the NASDAQ under the ticker symbol GLND. I want you to make your way to their website, which is greenlandenergyco.com, greenlandenergyco.com. Of course, visit us here at the Investor Brand Network as well. Click on that Clients tab, and there in alphabetical order, you will see Greenland Energy Company. We're going to be welcoming to the show in just a minute the Chief Executive Officer for the company. That's Robert Price. We're going to learn about his background from him, but you should know he has assembled and managed companies across the energy, real estate, and manufacturing sectors, and he founded Brooks Energy Company all the way back in 1991. With that, Robert, welcome to the show. Thanks so much for making time for us today.
Stuart, I'm really pleased to be here. Thank you.
Exciting to speak with you today, and I want to get into more about who you are. But first, for those listeners and viewers who may not be familiar with your company, let's talk about the business model and the markets that you operate in currently.
Yeah, so Stuart, we are traded on NASDAQ. We went through a process of a de-SPAC. We just raised $70 million, and that just happened yesterday. And so our project is fully funded to drill 2 wells in Greenland. The wells in Greenland, they're actually in the Arctic Circle, but they're barely in the Arctic Circle. They're at 70 degrees latitude. Also at 70 degrees latitude is Prudhoe Bay, Alaska. Prudhoe Bay, Alaska is the largest oil field in the United States and North America. It was discovered by ARCO dating back to the 60s and 70s. After ARCO discovered Prudhoe Bay, Alaska, they had their number one prospect, and that prospect is our 2 million acres in Greenland. And Stuart, ARCO, they spent over $275 million doing seismic programs during the winter and the summer months, Vibrasize and dynamite. They built an airport and a seaport, getting ready to drill their number one prospect. And Stuart, through macroeconomics of the 80s going to the 90s, oil prices cratered, and they walked away from it, and they never drilled their well. We have all of ARCO's historical data. We actually took their seismic and reprocessed it with modern seismic techniques, and our independent engineering report says that we could have an upside of over 13 billion barrels of oil. Truly one of the most exciting projects I've ever worked on, Stuart, and we're drilling our first 2 wells this year.
That's saying something for this to be one of the most exciting projects for you to have worked on. So let's learn about you, Robert. I mentioned it at the outset. Let's learn about what brought you to where you are today.
Yeah, well, so I grew up in Denver, Colorado, and I started in the energy industry as a field landman. So I negotiated oil and gas leases with farmers and ranchers for independent and major oil and gas companies. And let me say, Stuart, that really helped me learn negotiating skills, being at the kitchen table with farmers and ranchers. And I knew early on that a transaction needed to be win-win because the people I dealt with, they were shrewd. And so I walked away with an oil and gas lease. And so that's what I did. But in order to move up in the industry, I needed an advanced degree. So I went to law school at University of Tulsa, specialized in energy law, but instead of working at a major oil and gas company, I ended up working at a bank managing oil and gas trusts of some of the wealthiest people in the country. Our little tiny bank at First National Bank and Trust Company of Tulsa, I ran the largest oil and gas trust department in the country. And
Wow.
Stuart, I got to see firsthand what oil wealth did for families and beneficiaries and communities. And so I started drilling my own wells. I drilled wells in Oklahoma, Kansas, Colorado, North Dakota, Montana, and elsewhere. I ended up partnering with people like Halliburton.
Hmm.
Halliburton, they funded my project in North Dakota. And Stuart, it is pretty atypical for a service company to put money in an exploration program because they don't want the appearance that they're competing against their customers. When I was in Colorado drilling 2-mile multi-stage fracs wells, they had a 20% stake in my project. And so, Stuart, I have drilled for and found millions of barrels of oil, but I have never in my career drilled for billions of barrels of oil. And that's what this project is all about.
Well, let's dive into that project a little bit deeper as well. So you talked about where you're positioned at one of the last major undrilled onshore basins globally. That was a fact I was able to pull up. So what makes this asset fundamentally different from other frontier exploration opportunities that investors, policymakers, why should they be paying attention to it today?
Well, first of all, let me just a little bit on geology.
Okay.
Before continental drift, our basin was part of the North Sea. So
Okay.
all our rocks are exactly the same as the North Sea. On our location, we have oil skims of oil on the surface. You can see it in some of the streams. We have actually genetically tested our oil to be exact fingerprint to the North Sea Brent crude. So it's 40-degree light sweet crude, unlike the Venezuelan heavy crude. And so, to your question about policymakers, so when the Ukrainian war broke out, Europe was importing over 2 million barrels of oil a day from Russia. They stopped importing. Who made up that short supply? The U.S. shale industry. Well, if prices go back to $60 to $70 a barrel, U.S. cannot make up that short supply. And so our project, when we drill these wells, could be very significant not only to U.S. energy security, but also European energy security.
Well, and that's really important because that really leads me into my next question. Because obviously, when we talk about Greenland, it jumps off the page based on recent conversations. We've seen a lot in the news. And so, recent geopolitical disruptions have refocused attention on energy security, particularly in politically stable regions. So, how does Greenland Energy's work in East Greenland fit into the broader conversation around long term energy independence for the US and its allies?
Oh, Stuart, that's a great question. So, talking a little bit again about the U.S. shale industry, the majors, including ConocoPhillips, Oxy, and others, they have leaned into the shale revolution. At $60 to $70 a barrel, that's the break-even point. And so there's up to 85% of their profits that come from U.S. shale. There's very few companies that are looking to discover new fields. Now, ExxonMobil in Guyana, they have an 11 billion barrel discovery. That's the biggest discovery in the past 3 decades. There's two minor discoveries off the shore in Brazil, one 3 billion, one 5 billion. And so these companies, particularly ExxonMobil, they're looking at more friendly jurisdictions. So if you're expecting your oil from the Strait of Hormuz, let me tell you, Iran has been empowered about what they can do with drones and disrupting not only energy supply, but disrupting world economies.
Hmm.
Where we are in Greenland, this is a friendly jurisdiction. We are close to the European markets. And so we'll, as I mentioned before, we'll drill our first 2 wells this year. The logistics is already in place. We hired a company named Deganye that's been shipping in the Arctic Circle, Stuart, since the late 1800s. They're still partially family owned, about 1,200 employees. that vessel will leave the port of Montreal in September. Now, what we're going to put on that, we're going to put on the Stampede drilling rig. They're also based out of Canada, Calgary. Rig number 12 is used to drilling in the northern part of Alberta, so used to Arctic conditions. Halliburton, they're they're helping with project management and logistics, and they're providing their world-class products and services. That ship will leave the Valleyfield port in September. It'll go to Nook. It'll pick up equipment that from Denmark and Germany. Then it'll go to our area. This project is all onshore. So our first location is 3 miles from the beach. We'll do the beach landing. We'll have our road ready to go. And then during the first freeze, which will be in the first part of October, we'll begin drilling our very first well. And this could be up to 13 billion barrels or more. But Stuart, just on our first location, our independent engineering report says it could be, this first well could prove up to 2.9 billion barrels of oil just by this first drill. I want to just talk a little bit more about drilling. It's
Sure.
only 11,500 feet deep.
Okay.
If we were drilling this well, for example, in Wyoming, it'd take us about 7 days. But because this is the very first well ever drilled in the basin, we're going to take our time. And so it'll be about a 30-day well. We'll go through each one of the formations. We took Arco's data, we reprocessed it with more modern seismic techniques, and that data shows us we will encounter up to 5 different traps where the oil is trapped. So each one of those formations we'll look at, we'll evaluate it, and then we'll go to the next one and next one and next one. So on this first well, we got a good shot of discovering oil.
That's fantastic. And it's got to be music to the ears of your existing shareholders. But for those of you who are discovering this company and this ticker symbol GLND, it needs to be added to your watch list. You need to do your due diligence on the company. The investment highlights at Investor Brand Network jump off the page. There's a nice cursory dive into the company there. You can get management backgrounds, and then it links off to everything you need to know to stay in the know on this company. Robert, your company has emphasized that this is not a short cycle drill program. And as you just pointed out, for very good reason, this is a long-term conventional supply project designed to address future shortages. So my question then is, how does that long cycle mindset then influence your planning, your capital discipline, operational decisions heading into the 2026 drilling program and campaign?
Absolutely. For these first 2 wells, we are fully funded to get
Okay.
these wells down. So after we drill the first one, which will be done in October, we'll break the rig down. We'll go about another 8 miles, and we'll start drilling our second well. And we should have really interesting information from these wells. But what I want to share with your viewers, Stuart, and you, is if this was the first well ever drilled in the Permian Basin, that's one of the hottest basins on Earth. What you would have a team of landmen that would rush in and start leasing up from the farmers and ranchers. And if you're a major oil and gas company, you might be lucky to have 5% of the Permian, maybe 7, really lucky if you have 10%. And so where we are, we drill our first 2 wells. Stuart, we own 70% of the entire basin. So we have no competition, no landmen, no other ones going to come in and try to carve out this and that from us. Just by the fact that we drill these first 2 wells, we own 70% of an entire petroleum basin.
That's fantastic. And again, these facts just keep jumping off the page and jumping out of this interview that we're conducting with you right now, Robert. So clearly, this story is starting to speak for itself. And speaking of that, you have spoken publicly about responsible development, under Greenlandic regulatory oversight. So, what does that actually look like? What does Arctic exploration look like in practice? And how are these environmental considerations integrated into your operational plan?
Yep, absolutely. We've been working with the Greenlandic people
Mhm.
on responsibly developing this and the permitting process. And let me say, they've been great to work with. They've been very responsive on our scoping reports, our environmental studies. And so, as I said, the first well will be drilled during the first freeze. That'll actually minimize some of the environmental impacts. But once we go to full development, they will be a partner in developing this field. Prudhoe Bay, Alaska, Stuart, it has been the economic engine of Alaska for the past 5 decades. And so this is about not only drilling the wells and discovering it, but working with Greenland, how we responsibly develop the resource over the coming, years and decades to come.
Well, and early on in our interview, you talked about the work that ARCO has already done. In golfing, we would call that reading the putt of the putter in front of you. So, with decades of historical and seismic data from ARCO, can you explain how this legacy data mixed with all the new technology that we've learned about here at the Investor Brand Network, doing the Mining Newswire, speaking to some of the companies with some of the new technologies that are implementing AI. How has that, really taken the risk reward profile? What has it done to it for your first drilling?
Yeah, so all of Arco's data, again, they spent over $275 million in building an airport, a seaport, and doing all this seismic. If we were to go to this area without that incredible data of seismic, it would take us another decade to get it. So we are sitting here with this historical investment. Now, the seismic is good seismic. It's just the technology of processing it. ARCO used the same seismic to discover Prudhoe Bay, the same type of seismic. Here, to your point, Stuart, we have taken their seismic and we have reprocessed it with modern seismic techniques. And that's where it shows us we can encounter 5 different trapping mechanisms. So when ARCO discovered Prudhoe Bay, their break-even cost was $5 a barrel. Since we are 70 degrees latitude, they're 70 degrees latitude, it's the same Arctic conditions, so we're barely into the Arctic circle. So with modern, modular plants and others, we could have one of the lowest break-even costs, literally minus Saudi Arabia, on the planet because, Stuart, we're not drilling horizontally. We're not fracking wells. This field is what was discovered in the 20s, 30s, 40s, and beyond. It's all conventional. Our seismic shows us that the basin has been uplifted, so we are prepared for significant pressures as we drill through these zones. And so we're just excited to bring the 2 wells, get them drilled by the end of this year.
Well, there's that word again, excited. And we're excited to be speaking with you today, Robert. This has been a tremendous interview. Let me leave you with one last question. So, looking at the upcoming drilling milestones that you have directly ahead of you, what should Mining Newswire and Energy Wire readers watch for as the most meaningful validation points for the Jameson Land Basin over the next, let's say, 12 to 18 months?
Yeah, so we're going to see a lot of activity. So we have the rig, the Stampede rig, in Calgary. We're doing modernization of it, and then that rig will begin to be shipped in the summer to Montreal. All of Halliburton service equipments will be shipped too. We're going to communicate with all of our shareholders by having a cinematographer with the equipment as it hits the port in Montreal. Then as that ship goes around, it'll pick up that additional equipment. Again, this is in September in Nook, and then we'll do a beach landing. We have 300 containers equivalent that are going to hit that beach, and it's going to truly be spectacular. That'll be right around September, and then we'll have the 3-mile road built in. And then again, the first well will be drilled in the first week in October, take us about 30 days. And so then that'll move to the second location, and we should have real-time information about the 5 different zones that we drilled through on the first well. And that will be coming out in, right around November time period. Our second well will be drilled, and we should have real good information no later than January of 2027. And Stuart, let me just say, we are a very small cap company, right around, $100 to $200 million market cap. By the end of this year, our little tiny company could look more like an independent or major oil and gas company with a discovery.
Well, that is how we want to wrap up an interview. That is called the crescendo, Robert. And thank you for doing that for us right there, my friend. What a great first interview with Robert Price, Chief Executive Officer of Greenland Energy Company, traded on the NASDAQ under the ticker symbol GLND. Robert, we really, truly want to thank you for your time today. We expect great things from you and your team here in 2026 and well beyond. And I look forward to tuning in and checking in with you again here in the year 2026. Thanks for your time today, Robert.
Thank you, Stuart.
All right, for Robert Price, this is Stuart Smith saying thanks so much for tuning in. But before you go, don't forget to hit that like button, hit that subscribe button. Make sure to leave a comment for this company, and we'll get that question answered in our follow-up interview with Robert Price. Thanks for tuning in today.
The MiningNewsWire Podcast is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. You should assume that the owners, officers, and directors of IBN or financial analysts mentioned in this production may hold a position in and may intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please see IBN's full disclaimers and disclosures at www.ibn.fm/disclaimer. Music in this episode is by Infraction. For more, visit inaudio.org.